I'm Matt Bishar with REIT.com here in New York City for REITWeek 2014, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Jerry Barag, President and CEO of Catchmark Timber Trust. Jerry, thanks so much for joining us.
Nice to be here, Matt.
Your company reported very strong first quarter results. What drove that performance, and how do you see those factors playing out for the rest of the year?
Firstly, we implemented a new management team and a new management strategy concurrent with our IPO that concluded last December, and that's going along very well. We've increased production volume significantly over last year and have brought on enough contractor and manufacturing capacity to handle that. At current rate, we're running slightly ahead of schedule for the year. And we have also encountered a very strong pricing environment at the same time. And so as a result, we have been able to increase guidance once this year, as well as announce a dividend increase just a couple days ago. We expect that those conditions will persist for the balance of the year. We have some operating capacity left to finalize before the end of the year, and one large land sale which has already been committed for December. But in general, things have gone very well.
And I'd like to touch a little bit more on sort of your thoughts on the acquisition market. How are you seeing pricing and competition right now?
We've been very pleased that since the beginning of this year, there's been an ample supply of property that has come onto the market or that has been available to transact. And we have been working our way through that and been successful on garnering and closing several transactions. And quite frankly, our pipeline continues to expand, and it looks like after a 6-year hiatus in the timberland markets that 2014 is shaping up to be a more normalized year in terms of transaction volume, and we expect to participate fully in that.
And lastly, your company has a very focused strategy on owning timberlands and not getting involved in any sort of the ancillary businesses that some other timber REIT peers do. What is the strength of this strategy, and are there any risks that you get asked about?
We're a Pureplay company, and we've made it our mission to be very transparent and easily understood by the marketplace. As a result of that, as I said before, we're at least right now, exclusively focused in the U.S. South, and we have made an effort not to enter into any other ancillary activities that many of the other participants in the timberland REIT world participate in, and that's been a thoughtful decision from a return standpoint, a volatility standpoint. Manufacturing businesses, while during up cycles have great rewards associated with them, have equal negative downside in softer markets. And as a result, the timber that we supply tends to have a lot of optionality, but most importantly, it's a non-perishable asset, and so in down markets, we have the option of not harvesting the timber, but saving that for future periods, saving that income for future periods to the extent that pricing isn't up to the standards that we would expect it to be. A manufacturing business which has a much larger capital commitment associated with it and a inventory cost associated with it doesn't afford you the same ability to do that, and as a result it creates much more volatility in the returns.
Thank you so much for joining us.
My pleasure.
For more REIT news and analysis, be sure to visit REIT.com.